All right, great. And folks, what a day to have this, huh, with the market doing what it's doing. And I think this Rule 711 is pretty good. Before we get started, Adam, why don't you give it a chance to fill out a survey and find out who's here. And in that, we'll give them a copy of my first book, Winning the Day Trading Game, the audio book. They'll get a copy of that if they just fill that little survey out. I like to find out who I'm talking to. And I think you'll enjoy the book. It's in 11 different languages, but I think that if you're interested in how I've been doing this for 33 years, it sort of lays the framework and the foundation of that. So let's get started. The reason I said what a great subject for today, the 7-Eleven, because I used it today to get along the market, and we'll talk a little bit about that. But again, I want to thank everybody for having me here, and let's get started. All right, I did start trading live in front of people. I was a little crazy at the time to do that. Obviously, I was down in Orlando at one of the money shows, and we were competing against a lot of people with a lot more money than we had. And I said, well, one way to get noticed is to trade live. So I remember that first time, and I remember people being lined up like almost a mile to get into the small room that we had. And so I've been trading live ever since as a way to show people how this works. I am a member of the Chicago Mercantile Exchange. I'm a professional trader. I graduated from the University of Georgia, went to law school at OCU, and this is a real key and some experience that a lot of people didn't or wasn't able to get. But I got selected to get one of the first Globex terminals, which is the foundation of all the live trading we do today. And I had one here in Mobile, Alabama. I remember I used to tell people the only Globex machine from Boca Raton, Florida to Houston, Texas. Now, trading is risky, and one of the things that I'd like to tell people is that you really need to have a risk plan in place before you start this game. You know, it depends on really the size of account you got. I see a lot of people come and go because they don't think out this part of it. What I tell people, don't risk more than $300 per trade. And whether it's a future options or stock, I can show you how that works, but that's what I adhere to when I put trades on, $300 per contract. Works this way. If you buy 100 shares, $300. Now, understanding the global markets in 24-hour clock, you know, with my background with the Globex terminal, I had a unique perspective when I found out why I wasn't consistent. And I wasn't consistent at the time, and then I figured out, using that Globex terminal, that there's really 4 different markets during the day. There's the Asian market, the European market, U.S. market, first part, which is the eastern coast, and the west coast. I don't know where you're from today, but depending on that decides when you're going to sleep and when you're going to get out of bed. Common sense tells you that there's trading going on around the globe. The very first thing I learned as a trader, and I sure want to cover that today, is that 75% of all stocks move with the S&P. So if we can figure out the direction of the S&P, then we can be pretty good stock traders. You know, 75% of all stocks move with the S&P. You know, stocks like Apple, IBM, GE, Microsoft, all of these will go up. Look at Apple today. The S&P's moved higher, Apple's moved higher. These are the kind of things that you start learning about the indexes when you're trading futures and you're trading options and you're trading stocks, the 75% rule. Now, the market never sleeps. You think about it at night, you wake up. I think a couple of days ago we had that incident in Australia, and it was being reflected in the marketplace if you were up watching the market at the time. So what we did at DTI, I put together 3 components of what I would say make up our method here. Time of day, and a little of that's attributable. I don't want to take all credit for that, but I don't know if you ever studied about Jesse Livermore. Jesse Livermore was a trader about 100 years ago, and I was fortunate enough to meet a guy that had spent his life's work studying Livermore. And what I learned from him is that Livermore looked at time as a factor in making his investment decisions. And what I did, he looked at it a little bit longer time than I currently use, but I broke that down and said, let's look at a day and say, during this 24-hour market, when should we trade and when should we not trade? That was the question I asked myself. The other thing that I found out from Livermore was key numbers, about how important numbers were to deciding how you're going to trade, whether you're going to be long, short, or out, and then developing indicators that would match up with those 4 time segments. Start time. The Asian market goes from 5 o'clock in the evening, that's Central Time, to 3:30 in the morning. If you'll go look at today's market, you'll see a discernible trend that happened during that time period. Then you'll get into Europe at 3:30 a.m. in the morning to 8:30. Now in Asia, I look at 2 markets, the Hang Seng market and the Nikkei market. In Europe, I look at 4 markets, the FTSE, the Swiss, the CAC, which is the French, and the German market, which is the Big Daddy. If you follow the DAX, you will get a heads up on what's happening in the market. And then, of course, in the morning, we have the traditional indicators, the advanced decline line, the tick indicator, the trend indicator, and actually the futures themselves that set up trades in the morning. And then in the afternoon, you're getting in more into California, just where stocks start playing a role into the direction. How did they match up with what happened with the futures? Were they traveling along with them, or were they diverging? This is what's important to look at in the afternoon. There's another way of picturing how I think of the day. Asia first, Europe second, U.S. in the morning, and we're finishing up the morning session right now as we go into the afternoon. So if there's going to be a trend change today, I know right from the beginning that trend change is going to happen between 12:30 and 1 o'clock, which is the start of that afternoon session. If we don't have a trend change during that time frame, then you can expect to see an acceleration of the uptrend that was generated in the morning. That's simple, straightforward. Think about it this way. Market's been up. If it stays up during that time period, we go into California, then California's going to step in and send us higher. Key numbers. It's a combination to decide whether to be long, short, or out. For example, at the start of the year, we opened the S&P at 1837. Right now it's at 1998. So looking at the year open and where we're trading right now, the big trend has been positive this year. You can break that down to the monthly, to the weekly, to the daily, to the current trend. In that, you'll find support, pivot, and resistance. I'll tell you right now for the S&P, that number's around 2006. This is where the 7-11 rule starts playing in to the current direction. Let me give you an example. We rallied from 1961, last night's low, up to 2011. How many points is that? From 1961 to 2011. Wouldn't it have been handy to know at 1968 you ought to be looking up? That would have been a handy thing to know, wouldn't it? Right? So when we look at where we are right now, there's 2 things to consider. Number one, we're about to make a time change to the afternoon. And the second is we went up to 2011. We're trading at 1998. And the second thing that we're looking at right now, we got a minor sell signal going on. Now, what you don't want to see, us below 2006 after 1 o'clock. If you see that, then the rally this morning will fade, and you'll see the market get under pressure if that occurs. Okay? So keep that in mind. What I'm looking at as we go into noon hour today is whether or not we get back above 2006. That's first it. And number 2, it's after 1 o'clock. The major market indicators that help me guide me this afternoon, I'll look at stocks and I'll say, okay, is this stock up on the day or down on the day? Let me give you a stock you might want to look at this afternoon. Western Digital, WDC, it has a very good day today. If it's above 107.50 and the market's going higher, then that 75% rule I talked about should come into play and push it higher up to maybe 110 by this afternoon. That's an example of taking the index play, the 75% rule, and line it with the 7-11 rule, which is the 2006 number. Now, depending on the time of day, you're using either traditional indicators during the day or at night. You use my indexes that I talked about, Asia and European markets. During the day, I look at the tick, advanced decline line, and major futures. Now, the S&P 500, it's the king. What is the S&P going to do? Right now, the S&P is trading about 1997. I said it's in a minor sell signal. I said that at 12:30 we have a new start to the day, and we got to look at that opening price at 12:30 and measure it from there. Virtually, the S&P allows you to trade virtually 24 hours a day. And so looking at the futures market, and that's what I look at, the actual futures market, to make my decisions on whether I'm going to be long, short, or out. NASDAQ futures is when I'm looking at tech stocks. Today I'm looking at Apple, Netflix, Google. These are some of the tech stocks I'm looking at today. NASDAQ's very similar to the S&P. The only difference is it's $20 a point. And so if you're looking at the NASDAQ right now, you say, hey, it's at 4163. How does that stack up? Well, it's had a tremendous rally from last night's low. All right, let's look at a code of the market. We talked about the yearly open, the monthly open, the weekly open. Let's look at where we're trading now. We opened the year at 1837. Currently, we're at 1997. That's positive. We opened the week at 1990. Currently, we're above that. That's positive. We opened the month at 2063. Now, this is the real part that 33 years of experience brings in here. If we go above 2006 and reignite a 7-11 buy signal into the close this afternoon, then you're going to see us go up and challenge that monthly open in the next 7 days. That's a pretty valuable rule to understand the implications of it and how it works. NASDAQ, that's what it looks like right now. Notice that the weekly open on the NASDAQ's 4184, so it is not as strong as the E-mini was. And you got a lot to go, so we could have an explosive rally over the next few days. You know about bull markets being slower to conform, and how fast we dropped from yesterday morning all the way down to that low of 1961. Wow, it was like butter melting on a hot skillet. I think the market's reversed and going higher. Now, the reason I think that is some other factors like the seasonals. Right now, this is a very seasonally strong day. If you look back over the last 21 years, you'll find this particular day is up about 60% of the time, pretty strong numbers. If you look at the period of time from now to the day after Christmas, it's a seasonally strong period. So everything is stacked up, except you got to have verification with the S&P getting back above 2006 after 1. Now, this is the daily of the S&P. If we take the 7 points from the low, I want you to do the math in your head. 1961 plus 7 would put you at 1968. So at 1968, with the other things and the other filters I have with the S&P and the 7-11 rule, I'm able to make decisions to go long way ahead of most people that look at charts. I call this favorite trade the 7-11. It's based on the E-mini and the same time movement of the NASDAQ. It tells me when markets have reversed. If you take the time of day, which I did for you, and look at 1 o'clock, then now we get a rule that is really tradable, and the percentages go off the charts about how accurate it is. For example, going back to the decline and the rally. If you'd have stayed with the 7-11 rule, I calculated it out, 20 points, 23 points, and another 35 points. What is that? Over the last 50 hours, just knowing this one rule would have kept you on the right side watching it trade. You'd got short yesterday morning. You took it down all the way to 1961. You got long at 1968. And right now, you'd be out of that trade with a minor sell signal. Here's how it works. Once the low's made, you add 7 points. Now, time is a factor in this. You just don't want it to make a low and then assume that's a low. You want to give it time to digest that low. I tend to give it at least an hour, but the longer time that you're away from that low, the better low it is. All right. At 6 a.m. today, ES sold off to 1961.50. If you add 7 to that, it puts you at 1968.50. If the E-mini exceeds this, it should move higher, and exactly what it did. That's what it looks like on a chart. See the 61.50? See the rally? And that rally took us all the way up to 2011. Currently, we're at 1999. Now, because I said we're in a minor sell signal, we were 7 points below the high. Right now, with an hour to go, you're sort of in that no man's land. I would wait to 12:30 and do a new setup with the 7-11 rule, and that's experience. And look at what the NASDAQ did during that same time. We exceeded our target over on the E-mini, and the NASDAQ actually hit it. Okay, so what we decided to do to teach all of you this is make it where it would be a no-brainer for you to learn, okay? So what we're going to do is I'm going to give you 10 days with me in December with a plan of taking advantage of the last remnants of 2014 together. I'm going to teach you the 7-11 rule in a 2-hour webinar, and I'm going to give you the playbook that I use and the one I've got planned for this December. Okay? It'll tell you what direction I'm trading, it's going to tell me when it starts. Notice I've got the 16th through the 26th. It's going to tell you how to trade it. And this is when I'm talking about trading it, we're going to get this E-mini here, and you translate that to stocks, okay? What to buy, stocks that I think will go up, stocks that I think will go down. All this will be discussed in our webinar. I'll be using the 7-11 rule to trade futures and stocks over the next 10 days. And so this schedule works out perfect. I mean, I don't think there's any better way to learn this rule than watch me use it for you. The option strategies that I'll use using the 7-11 rule, I'll bring that out during the webinar, show you how that works. Maximizing the 24-hour clock for the entries and exits. And then we'll give you some recordings to familiarize you with future stocks and options, DTI style, and then a guide to help you with your retirement. In fact, there was a stock I bought last night that I think is going to rise about 30% over the next 30 days. And we got long last night, and I'll be buying more of that stock. That'll be part of this also. So the idea is, does it really cost you any money if you have a chance to make live trading when you're doing it? I don't think so, because if you took what I've done today with my people, they're all smiling. All right, let me go to my roadmap software and show you some current markets and things that I'm interested in, and I'll come back if you got any questions. First of all, this is the E-mini. Everybody sees it. If you draw this out from the 7-11 rule, and you come down here from 1961, can you see my cursor? I don't know if you can see my cursor. Okay, if you see my cursor, you see that rally up to that 2011. Notice it stopped short of the 2012. Chart readers say, hey, it failed, right? Well, I'm not saying that. I'm just saying If you take 7 off that 2011, puts you at 2004. If you get above 2006, okay, after 1, then you're going to see the market accelerate this afternoon, take out this high, and it targets about 2018. Oh, how did I arrive at the 2006 number? Because yesterday, you might have heard me say this, the 7-11 rule yesterday kicked off at 2006 as we went down to the 1961. So once we exceed the last 30 hours of down action that we've had, it'll erase that from people's memories, and they'll be buying it and doing their thing. That's a great question. Oh, the time frame's a 30-minute chart, and let's see. Most chart readers right now think we failed today. I don't think that. I think that what you're going to see, and it's going to happen after 1 o'clock, you're going to see an acceleration. 7-11 rule kicks in again off the low, 7 points. 98 puts you at 7 points, 2005, 50. 2006 is the key to this whole market. It's the whole key to this whole market. So if we close above that, not only will we go higher today, I expect to see us go up to 2070. Okay? Yeah, the 7-11 rule, okay? 7-11 rule, there's 20 filters to the 7-11 rule. Excuse me, I said 20. There's 10 filters. So I'm giving you the basic foundation of it. Think about it this way. Find a low in the market of the E-mini, count up 7 points, and ask yourself, has it been an hour since that low was made? If the answer is yes, you go to the next question. Is the NASDAQ 11 points off its low? So 7, E-mini, 11 points NASDAQ. And now you go through the filters I'm going to teach you about in the 2-hour webinar. One of the questions just came in, said, Tom, so we take the 2000 webinar, we learn everything to look at, and then we're able to stay with you for those 10 days in a trade room? Absolutely. Absolutely. Yes, I do. Yes, you can use it in other markets, Nasser. That's a little bit more complicated, more than what I'm going to teach in this particular webinar. What I want to do is I want everybody out there to understand. Y'all see my chart has a green background? You see that green background? I have it built in here to make it simple. And then in the new version we're going to release at the first of the year, it will automatically change colors. For example, when it turns red, you'll start seeing this on our software, which makes this, I think this rule's that good, is that when it turns red, then you will see it. Let me see if I can find out where the, I don't see it, but anyway, the point is the background would turn red if it was a sell. Pretty cool. The room is $97 a month. $97 a month to continue if you like it. The first thing I want to do, though, is really show you over a course of 10 days how many times the 7-11 rule will pay you money using options, using stocks, using futures. And that way, for those 10 days, you get to really get a good understanding of it. Y'all have any stocks you want me to look at? Let me talk about Apple. I'll just give you the numbers on Apple, okay? And something's happened with this room here. It won't let me change my slide. Adam was trying to change it to the slide. I don't know what's happened there, but let me just tell you about Apple since I trade Apple. Apple, I told people today, I was extremely long Apple today, and I told them it had to be up today or I'd get out of Apple. Now I think Apple will stay up and continue up and rise to December 22nd. My target is 126. I don't know if we'll get there. If it does, I'll be a happy camper. I am long Apple. Okay? Hershey. John, you can buy Hershey, okay, on January the 11th. If you'll check out the seasonals on it, it's pretty powerful. Adam's playing with it to see if he could get my roadmap where I can, he's going to end it and bring it back, I guess. I don't trade Alibaba, but I'll tell you, I looked at it the other day for a guy, and I think I might stay out of it for the time being. I got a better stock for you if you want to make some money. It's called Western Digital. That stock today, Western Digital, is at 107.22. If it looks to you like it's going to close above, 107.5, you can make some money. All right, let's go back. See the E-mini. Let's put the E-mini in here real quick and let you see what I'm talking about. See how that 7-11 rule would keep you from buying right now? All right, 75% off stocks. See, if you take the high 2011, put you at 2004, which is about right there, and we're coming down. Now, where do I think the market will hold? Probably between 1987 and 1990. It could go as low as 1984, but it should hold there and then go back the other way, okay? That's what I would think after one. That's why I say it was a minor sell signal. But you see, the power of the rule tells you, hey, if you were thinking about buying something, don't buy it until this thing stabilizes. Using that every time over the course of a year would really help you, okay? 126 was my Apple target. Here's a stock that one of my subscribers gave me yesterday. Have y'all ever looked at this deal? I bought it for the first time today at 40. Well, actually 38.5 is where I got filled. Well, for some reason it's not coming up. It must have a special code. Anyway, it's Russell. It's a play on the Russian economy. And anyway, I bought it, and the stock took off from 38. It's up right now. I just showed Adam. It's up to 50. I bought 100 shares of it just to get in there. Sucker's up $1,200 on 100 shares. We'll do something like that, I'm sure, if you spend some time with me. Oh, what's the code to sign up? How much time I got, Adam? Okay. I can take a few last questions. A lot of volatility in the market, isn't it? Oh, the Russian plate, RUSS, Russ. The thing's had a range today. And, wow. Hey, let's look at GMCR. I have a friend of mine that put me on that one. Yes, it's a 2-hour discussion of the 7-11 rule, and I put the bonus in there, trade with me for 10 days. Okay? Let's put GMCR in there because I want to look at it. he was telling me he had a big day in it the other day. I don't want to look at the stock itself. Oh, okay. He started watching this stock in the 140 area, and he decided to wait. He got down here, and when it went into a buy signal at 135, that's when he bought it, and it went back up and challenged that 140 area of GMCR. If you look at it, it's got resistance at 142. 142. All right, let me repeat the offer. Go back to the offer. We're going to take 2 hours on Thursday this week between 10 and 12. The idea is I want to teach you the 7-11 rule and the filters involved. Then I'm going to lay out my game plan for you over the next 10 days. And then you're going to get to follow me for those 10 days in a private room I have, okay, which will let you apply some of this stuff with the 7-11 rule and see it work in real markets. We'll record the special sessions that I do in case you have to miss, but at least you will get the ability to see it in actual play, okay? You'll see we'll be looking for it, the entry and exit and all that, and you'll have it at the end of that 10 days. Adam, I think they need, they have the link. What link do they hit to sign up? www.dtitrader.com/market. Perfect. So I've been trading for 33 years. I guess the proof's in the pudding. Oh, you know, let me teach you a little bit, show you what I've learned. Then you use that any way that helps you become a better trader. And then you know the 7-11 rule, and you know what to look for when you get into 2015. It's a great rule. I didn't give you the background on how I discovered. For all these years, if you're looking at charts, they're always behind. They're always what did happen. The 7-11 rule gives you predictive value because right now, let's summarize what I've said. If the S&P goes above 2006 after 1 o'clock today, I'm going to get long, and that's because of the 7-11 rule. So these are the kind of things that will make you do well, because I think any of you can do well if you have time to plan your trades and go through that process. And all it is a checklist and a process, simple, straightforward stuff. All right, well, I guess I've finished everything. I've answered questions. I've done everything. I hope you enjoyed it, and I hope you're thinking the next time you see that market make a low, what did I do when it goes 7 points and 11 points off the low? How did I take action? Okay? No, it's not a scalping course. Heck no. I'm too old for that. It's a make money course. I remember the days I used to scalp. 30 minutes. You like the make money course. I like that. Yeah, that's what we should have named it. The make money course. Anyway, but I think the 7-11 is so key, okay? Because, you know, as I told people, you know, I'll cover some chart reading in there. I'll cover pivot numbers, key numbers each day, all that stuff. Yes, it's recorded, Milo. It is recorded. Adam, I think I'm pretty well done. I told you if you wanted that audio book, fill out that survey, right? Adam put that in there. Yeah, absolutely. Yes, it will include it. I'll do that in real time for you, Chris. Let me tell you, in this field of education, I'm a professional trader. In this field of education, I'm a real practitioner of let me show you with real money. Okay? There's nothing better than showing you with real money. I mean, like Ann O'Malley sent me this Russ stock, RUSS, said, take a look at it. I said, Ann, I'll look at it, but that means I got to play it. So I watched it yesterday, and I got in today. Now I got to send Ann a Christmas present because I'm up on 100 shares of it. Look at him. Look down. I'm up $1,200 on that trade. That's pretty good. Hey, we'll try to trade Russ one day. Russ is that Russian deal. Yes, the recording's yours. No, 1 o'clock Central Time, Kathleen. Kathleen, where are you from? I like Kathleen. That's a great name. Chicago. Oh, super. One of my favorite cities. Okay, in summary, you'll get the 7-Eleven rule. It'll be taped. You'll be invited to trade with me for 10 days in my private room. And we'll get started Thursday. Matter of fact, if you sign up today, I'm going to have Adam go and send you a password to be there Thursday morning before we even meet with the rule. Let's do that. Let's make that one of the 10 days. Get it started Thursday. You like that? All right, Adam said okay. I'm still in those, Chris. Didn't get stopped out. Yeah, I use a $3 stop, and I don't. What's so hard about learning about $3 on? What's 5 minus 3? It's 2. Anyway, folks, it's been nice being with you. Thank you so much. Actually, you can, Z. If you'll ask that question in the course, I'll show you how. Absolutely. Great question. Well, I'm going to go to Olive Garden and eat some stuff. I'll be back in my room, okay? Hey, Lee. I'm out of time, Kamal. I'm out of time. I tell you what, I am long right now if you want to know. I'm long Russ, R-U-S-S. I'm long Western Digital. I'm long Google. I'm long Netflix. I'm long Apple. I'm long corn. I'm long CBOE and FedEx. I'm long FedEx. I'm long Office Depot. I must think something. What do I think here to be long all those stocks? What do I think to be long all those stocks? And they're all probing issues. That's about 25% of my liquid portfolio I'm long right now. If the S&P gets above 2006, I'll increase it to 50%. Todd, you got it. That's what I think. We'll see. Now, we got to get above 2006 to be for sure. And if I do, then you'll see all those stocks end up making me money. Smart guy, Mark. Going up. 75%. 75% of all stocks follow the index. Lou, I've made so much money on Netflix and Google this year. It's like an eyelash. Can you join today in my trade room? I'll tell you what we'll do. The first 25 of you that join today, I'll let you in there today. Be in there at 1 o'clock. I'll do that. First 25. Cut it off at 25 though. I'll do that. All right, I'm done. Thank you for coming. Remember, never trade unless you've had the training to trade. Common sense will prevail, and you have to learn before you trade. You can't get here any other way without learning. It needs to close above 2006. Let me be clear about that. S&P has to go above 2006. What did I tell you about the S&P right now? Minor sell signal, didn't I? I got to go. They're kicking me out.